So I want to express my appreciation for SCORE, for what the SCORE volunteers do, and acknowledge the high value, the high level of advice that is given, the support they provide to entrepreneurs, to business owners, and to would-be business owners. I always like to use that phrase, would-be business owners, because there's a lot of you who probably have ideas that you just haven't tried to turn into a business yet. My little secret here is I am also a former SCORE client. And my experience with my mentor was so terrific. I appreciated the questions that he asked, the way that he could just reach in and make me think and pull out answers. I just really appreciate the way that he's made me think about my business. And I can't believe these guys do this for free. These are volunteers. These are special people who want to help you, help others, and they do this every single day. It's an amazing resource. So I'm personally very grateful to have my name, even my face here for a few moments, and my business associated with SCORE for this workshop that we're about to do. So I'm going to turn off my camera here because I want you to be able to focus on the presentation. As I told Tim, I've been told to have a face made for radio. So I will turn off my camera if I'm able to and focus on the presentation. Here we go. All right. So if I can get that to advance, there we go. So this is the time to close your door, silence your phone, or otherwise turn off anything that might distract you from what you're about to learn. As a business owner or a would-be business owner, you deserve this time for yourself. You really do. And so, by the way, you're in the right place right now on this webinar. You're here because you have a business idea, or you've identified a business you want to start, or maybe you've identified a business you want to purchase, or you own a business that needs support, improvement, or expansion. And if you're here for any of these reasons, it really means you're here for cash. You need cash to make this happen. You're here because maybe the bank has already told you no, or they're about to. And you want to know, well, need to know what kind of funding options might still be available to you anyway, even after the bank has said no. So I'm sharing with you when banks say no, and I'll be highlighting some, not all, but some of the business funding options available for both startups, or even pre-startup, and existing businesses. Again, options that are still available even after the banks say no, which they do about 80% of the time.
Hey,
All right?
hey, Boyd,
Yeah.
just one, I'm sorry to interrupt, but just one quick question that come up earlier that I think it's probably important to get clarified. Somebody asked whether or not they would be able to get copies of the slides for the presentation. Is that something you'd be willing to?
Absolutely.
Okay,
Yeah,
all right.
at the end, I know the very last slide has my email address on it. If someone wants to just request the slide deck, I'm happy to send a PDF of the slide deck.
Okay, terrific. Thank you.
You bet. Absolutely. Yeah, good question. All right. So, okay. So this, actually, let me back up one here. There we go. So the overview of alternative funding options for small business owners, as I hinted at, also includes would-be small business owners. I do want to include those of you on the call right now who maybe are sitting on a business idea or two. You would-be entrepreneurs who maybe are ready to act, but you just need some funding to get going. I'm going to talk about options specifically for you as well, okay? So who am I and why am I going to teach you about these alternative business funding options? And as Tim mentioned, I'm a guy who became a business loan broker after the bank said no to me. So I joke about this as my comic book hero origin story. But let me know if this sounds familiar in any way to you. Well, now let me back up. I have personally started or purchased 8 different businesses so far in my career. And getting business funding for each one of them has always been the do or die part of each deal. And I've had banks tell me no. After the most recent no, I became a business loan broker so that I could help other people who were running into the very same problems that I kept running into. So as a business loan broker, I have 40, it's actually 42 now. I have more than 40 alternative lenders that I could bring to the table depending on any particular business owner's specific needs. Now, some of these are banks, some of these are private investment groups, and I even have the option to put some of my money into a deal if I feel like, wow, this is a really, really exciting opportunity. But commercial loan officers, commercial real estate agents, business brokers, franchise consultants, and SCORE mentors refer business owners and would-be business owners to me for funding after the bank has told somebody no, which they do a lot. So here's a little story I wanted to share with you. Once upon a time, really in the not so distant past, I wanted to purchase an existing business. Actually, my wife had had enough of my startups. And so this time she suggested I buy a business that already had revenue. So I agreed and we began looking for something to buy. And so we searched the online listings for weeks. You're probably familiar with Biz Buy Sell. I had a broker send me every week all the new listings, and I would just pour through them until finally I found one that I wanted. It was actually a CPR training center for sale by its founder. This lady had founded the CPR training business 20 years ago. She built up a nice client base and she wanted to retire. I thought, bingo, that's exactly the kind of thing that I want to buy. So her asking price, get my slide to advance here, there we go. Her asking price was $120,000. Which I felt was an absolute bargain after looking at the revenue history and the margins involved with this kind of business. Now, like most people wanting to start or buy a business, I had some cash, but I wasn't in a position to put 100% down. And in this case, the seller made it very clear there would be no seller financing, so don't even ask. So with a very high credit score, I was above 800, I had lots of business experience and enough cash to put 25% down. I started calling around to see, who'd like to give me a loan to buy this little CPR training business. I'm a perfect candidate for a business loan, right? I mean, look at that credit score, look at the price, look at the cash I had. You just think that this was perfect. So I started calling around. And you probably maybe have found this too. It's very difficult to actually get somebody at the bank these days to actually answer the phone, let alone a commercial lender. I left so many voicemails. I'd called just about every bank, every big bank, every community bank, every credit union in Brevard County where I am. Not one of them ever called me back. Then maybe it was just luck, I don't know. I tried again and a real person actually answered the phone, a real live commercial loan officer at a community bank up here in Brevard County. So I introduced myself and I told her, what I was calling about. I want to get this loan it was a business acquisition loan. Immediately mentioned my credit score, asked what the steps are to get this loan. And she asked me how much I needed. And I said, $120,000. Wait, no, actually less than that because I have 30,000 to put down. So really, I only need 90,000. And I thought by telling her this, that I was improving my position, I only need $90,000. And would you believe that she paused and said to me, this deal is too small for us to take on. Too small. And all I could say was, what? Too small? How can this be too small? And she said, it would be easier for us to get you $1 million because that would be worth their time doing the paperwork, paying out commissions to each other. She said, it'd be easier for us to get you $1 million. But I said, I don't need $1 million. I can't afford $1 million. I only need $90,000 to make this go. And so I began wondering what community bank even meant anymore, because I thought that's where you go for community-sized loans. I thought $90,000 would be a community-sized loan. Small loans, local loans. I mean, for decades, these community banks in particular, they've advertised about, we're here for the little guy. We have loans for the little guy. We love the little guy. Big banks don't care about you, but we do, right? We're your community bank, right? We're your neighbors. We love our neighbors. We go to the Little League games together. We hang our signs on the chain link fence at the football field. But she said again, there's nothing she could do to help me, that the amount of money I wanted was simply too small for them. Now, you've probably been told no at a bank, and the reasons can vary, but sometimes it has nothing to do with your credit score. In this case, they just said, no, it's not worth our time. $90,000, that's not enough. So I was so surprised after this reaction. I finally said, well, do you happen to know anyone who deals in too small business loans? And to my surprise, she said she did. She said, there might be somebody who could help me, somebody who does alternative lending. They do small deals. And so she provided me with that person's contact information, and I continued this quest for funding. So enter the alternative lender. Now, I did reach the alternative lender. I think he answered on the very first ring. But this guy should have just simply said to me, yes, we can get that money for you. However, he launched into this overly technical, highly confusing lecture on how alternative lending works and where the money was going to come from and how I would receive it. And he talked about issuing multiple new credit cards in my name that I could use to pay for the business. And would the buyer possibly accept payment via credit card? I didn't know. Oh, no worries. You can take cash advances on this. This ended up confusing me to no end. I've already earned 2 master's degrees in business. I could not understand what this guy was explaining to me. I was not familiar with the world of alternative lending, and I actually began to start feeling a little concerned that things weren't on the up and up, if you know what I mean. And I half expected that this guy was going to want to meet me behind the 7-Eleven and just start peeling off $100 bills from a wad of cash in his pocket. And no, that is not Tim in disguise. That's a stock photo. So this just, I couldn't accept that this was my only option. I couldn't believe that this is where it was. You're either taking $1 million loan or you're meeting the guy behind the 7-Eleven. But I thought there's no way the world of business funding can completely ignore these small deals. So many business acquisition deals, so many of these Main Street type deals are what we call small, meaning they're under $200,000. You go back to bizbuysell.com and see how many of those businesses are for sale for under $200,000. There had to be somebody good and somebody above board and reputable to deal with, but I couldn't find them. Fortunately, I have previous experience in raising capital for investment and acquisitions and such, and so I was able to tap into my personal network and find a private source from which to borrow the $90,000. But I was lucky. Not many entrepreneurs can get past that first hurdle of the bank saying no, which they do about 80% of the time. And not many people can just pick up the phone and get $90,000 based on the strength of a personal relationship. And so I realized I might be in a position to help some other people here, okay? So let's take a little interactive quiz. Can you name the 2 common challenges of small business owners? Access to something and blank flow. All right, access to something and blank flow. All right, obviously we're talking access to capital and cash flow. These are the two most common challenges of small business owners. So how many of you right now have an idea for a business that you want to start, or you found one you want to buy, or you want to expand your existing current business, maybe add locations, and you would if you just had the money to do it? How many times have we said to ourselves, gosh, I've got an idea. If I could just get some money together, or wow, I found an incredible opportunity. I just need some cash to get in. I know where you are because I've been there myself. You're on the outside looking in. No matter how great your idea or how perfect this opportunity could be, how great it is for you, without the cash to fund it, it will never happen. Cash is the missing ingredient. And without it, nothing happens. As business owners and would-be business owners, the little guys that the banks pander to, getting traditional capital, bank loans, is typically it's just out of our reach. Okay. It is just, it's out of our reach. I mean, let's admit it. We're little guys, and it's not worth their time to work with us. Okay. Traditional sources of capital, as I just emphasized, are out of reach. Now, I always say this to every person who calls me. Have you checked with the bank first? A bank loan is always going to get you the best terms. Bank loans are the best if you can get them. If you can meet their stringent requirements, they'll loan you their depositors' money. Because they're lending other people's money, their depositors' money, they have to be very careful with it. And especially right now, we're hearing about banks who are failing because their depositors are unhappy with the return they're getting on the savings account deposits. And they're taking, because of inflation and everything that's happening, they're taking the money out of the banks and putting them in other places that'll pay them more to park their money there. So the banks in particular right now are in a squeeze. They only make money by lending or charging you overdraft fees, but they make money lending other people's money. So they have to be very, very sure and very careful with that money before they lend it out to you. So in a way, you almost have to prove to the bank that you don't need the money in order to get the money. Here's a little meme that I have hanging in the office here. Can I borrow some money? Slap. Only if you can prove to me that you don't need it. Who has felt that way before? Man, just about every day. Anytime you go to ask for money, you basically have to prove you actually don't need it, right? Oh, I'm just borrowing it because it's convenient, right? It's all tied up in the Rolls Royce right now. I can't liquidate. But who knows? Who knows? So here's a little history lesson for you. To help make it easier for small businesses to get the money they need, the federal government created the Small Business Administration, which itself doesn't actually loan money, but it guarantees the loan to the bank in case you as a borrower are unable to pay it back. So the bank is never going to lose the money, right? If they're SBA guaranteed, they're never going to lose the money. They'll get it back if you can't pay it. So this generally has made banks way more willing to loan money to small businesses because they can't lose. They're going to get the money back from the federal government. But still, even as I clearly qualified for an SBA loan, it was just too small for that particular bank to care about. Wasn't worth their time. But generally across the board, we see that 80% of small business loans are denied by banks. So there I was ready, 25% down, 800 credit score, too small. Not worth the banker's time, not worth their effort when they look at the commission that they're going to get later. So as far as they are concerned, it's better to spend that time on a larger loan and get paid better. So here's another quiz. If 80% of small business loan requests are denied, what's a small business owner to do? The answer is find an alternative. We really need alternatives to traditional banks. We need alternative lenders who are more flexible, more creative, and who'll maybe take a chance on somebody that the bank won't. So frustrated, and Tim mentioned this at the beginning, frustrated by the lack of resources I was finding for the small deals I was doing, I myself decided to become an alternative lender. I became the very thing that I needed, a business loan broker, someone who could help people and the businesses who don't fit into the tiny little boxes that the banks require. So enter Otro Financial. If your Spanish is up to snuff, you'll recognize the word Otro as meaning other or alternative. And so our slogan is, bank said no, call Otro. So as I mentioned before, as a lending broker, an alternative lending broker, I have relationships with nearly just over 40 lending sources, each one of them specializing in different types of industries, needs, or products. And so I'm going to lay out a few options for you now to describe to you what some of these options are. They may be available to you, even if the bank has already told you no. So again, does this sound familiar? I have an idea. I just need some cash to get started. Here we go. Alternative funding options for startups. Now, startups are absolutely near and dear to my heart. I've launched several personally. I really truly believe that startup businesses, small businesses, they're the hope of America and they're the hope of our economy. This is where innovation, disruption, improvement, efficiency, creativity, all these forces commonly begin as startups. So are there funding options for startups? Absolutely. Even if your business is still just an idea and you're weeks or months away from revenue, if you have an idea, there are options available for you. This first one that I want to discuss, it's called a syndicated line of credit. And it's actually what the first alternative lender I ever spoke with tried to explain. They explained it very, very badly to me, but this is what he tried to explain. Now, in retrospect, as I have learned, these are hugely useful, very flexible, and I really wish he had explained it better because I probably would have gone down this road. This first option is called a syndicated line of credit. It's comprised of one or more banks issuing a new credit card to you. However, what they issue to you is not just a credit card. It can be used to actually pull the money out and take the entire amount as a cash deposit into your bank account. This is different than taking an advance on your credit card. If you go take your credit card, you go to the ATM, maybe you can pull out $3,000. There's a big cash advance fee, and that's at a high interest rate. That's different. A syndicated line of credit could be 2 or 3 banks combining. Maybe one bank issues you $40,000. 2 other banks issue 30 each. Now you're up to $100,000. You can use that $100,000 as a credit card to pay bills you need to pay to start your business, or you can take the entire amount of those 3 credit cards and have that cash put in your bank to be working capital. Now, after an initial success fee or a finding fee charged by the actual issuers, which can be as high as 10%, then that money is available to you for you to use at 0% interest for 12, 18, or 24 months. Hugely flexible way to do this. Now, I do have one partner I work very closely with, who will issue up to $100,000 per partner or applicant, meaning if I go apply, I can get up to $100,000 this way. Or maybe you have a married couple or 2 brothers or 2 partners in business together, they can each get up to $100,000. So then suddenly, look at this, we have up to $200,000 to use to start the business. Now, the lending decision on these syndicated lines of credit are based purely on the credit score of the applicant, or applicants, plural. Lenders will then also look at how much of your available credit you're already using. So if you have credit cards that are already completely maxed out and your credit score stinks, This is going to be hard to get you approved. But if you have room on your cards now and a credit score maybe a 680 or higher, this is a terrific, easy option to get, and it's very fast. Now, this product, the syndicated line of credit, you can investigate without undergoing what's called a hard credit pull. Every time somebody pulls your credit report, it damages your credit score, right? We know that. So we can show you how to do what's called a soft credit pull that has zero effect on your credit score, so that you can get an offer for a syndicated line of credit, and you can get your business started, or you could use that money to purchase the business you've identified you want to purchase. Then you have 12, 18, 24 months at 0% interest. You've got that head start. And then at the end of that period, you can refinance. After a couple of years, you become a candidate for SBA loans. So this is something that can help someone get started, even if they have no revenue. This is a good option to buy an existing business, possibly even a franchise, okay?
Hey, Boyd,
Yes.
I got a couple questions on this syndicated line of credit. Do you want me
All
to
right.
hold off on them or ask them now?
Let's ask them now.
Okay, so the first one is, so what is the source of these funds? Are they private loaners? Are they, is a consortium of banks? Where does the money come from?
Yes. With the syndicated lines of credit, they usually will come from banks, but the banks are only partially committing to you. You need 100,000. Maybe you get one bank offering 30, one bank offering 40, another bank offering 30. It limits their risk, but in this case, it's usually a bank, and these are well-known banks as well,
Okay,
who come together for this syndicated line of credit.
okay. And the second question is, do high or large amounts of existing student loans affect the ability to access this vehicle?
Student loans are not as much of an issue. The two things we're looking at are the credit score and how much of your existing credit card utilization is available. Ideally, if your existing credit card utilization is 25% of available credit or less, you're gold, okay? But if you've got a 20,000 in credit and it's all completely used up, that makes it real hard to get the banks to issue more. And I'm actually going to touch on that in my next little example of still what can be done in that situation, because there's still options.
Okay. Hey, and boy, just one other comment. There are apparently a couple folks that have raised their hand, and it's going to facilitate things if, because of the method we're using here, if they've got a question, to actually use the Q&A as opposed to raising their hand option.
Yeah, because I don't see the hand. I don't see any of that. You'll have to interrupt me to.
Yeah, I'm keeping an eye on it, but
Okay.
just if it can work, I'd ask you to use the Q&A option instead of raising the hand. All right.
Yeah.
Go ahead.
Yep, great. Okay. All right. Okay. So just to make sure, I want to just ask the question: Are you getting this? With no revenue, with no incorporated entity, just simply the idea for a business, you individually could get up to $100,000 to start your business or buy your business. A married couple, two business partners, up to 200,000, right? That covers a large number of the purchase prices of the small businesses for sale right now, or certainly can provide a hefty amount of cash to get your new business going. So,
yeah, Boyd, just one other question has popped up here. With this method, is this unsecured debt?
Yes. Yep. This is unsecured debt. This is in your name, reporting to your social security number.
Okay.
Yep. Because there's no entity. There may not be even an entity in existence at this point. So.
And there's no collateral required.
Yeah. These are no collateral, and they're not.
Okay.
They're not necessarily going to want to see your tax returns. I mean, these are quick decisions, primarily made on credit score and how much of your available credit is being used.
Okay. Great. Thank you.
Okay. All right. So back to this issue. My wife and I wanted to purchase this existing CPR business. We wanted to pay, we were going to pay $120 for it. We had the cash. We didn't have $120,000, but we only needed 90, right? So applying together, maybe we could have taken $200,000. We only needed 90, but maybe we take the full amount. We take 120. We hang on to our cash. We get 18 months at 0%. We pay the success fee, we buy the business. And by the way, our little CPR business did 170,000 in revenue the first year we owned it, then 205 the next, and then almost $250,000 the next year, just spinning off cash and creating wealth for us. Now, is it always this easy? Not always. Let's look at this same situation with some different variables. And this is a workshop, right? So back to the business that I wanted to buy, a syndicated line of credit. And I really want to focus on this fourth bullet point here. The decision is based on the credit score and existing credit utilization. So let's say then we wanted to buy the business for 125, 120, same thing, doesn't matter in this case. We have the money. Now, here's where things get interesting. Let's say that our credit scores were just okay, but we had to get some balance transfer happening to get certain credit cards under 25%. So let's say I have 4 credit cards and one was maxed out, another card had nothing on it, maybe another card was kind of in the middle. I used some balance transfers between those cards so that each card had a balance of 25% or less of what its individual limit was. So now I have 4 cards, but each card's balance is under 25% of their respective limits. That's one thing you can do to meet that criteria, because the lender really wants to make sure you're using less than 25% of your credit overall. Now, I've had several people say, well, all my cards are maxed out. I don't have that kind of room. So here's where an alternative lender can really get creative and help make this deal happen. We have a third party who can do a bridge loan. They pay off your personal credit card balances entirely, or enough to get them under the 25% limit, right? So that you can qualify for that syndicated line of credit right now. Later, it could be 30, 60, 90 days. Later, those amounts that were taken off your personal credit card balances are charged to your new business, where now they're business expenses. And as we know, business expenses reduce taxable income. So they go from being a personal liability on your own personal credit cards, they buy those loans, and then later charge them to your business and their business expenses. So this may not work in every single situation, but it's just always fascinating to me how creative these financial partners can be in trying to make something work so somebody can get that business purchased or expanded or started. So these are flexible. As I said, you can use the card, the amount, the available credit to buy things, or get that cash in the account to use that as working capital. And again, they have a funding fee, but then you can get 0% interest for up to 2 years, ideally. Then you can start making those payments. And as I said, after 24 years, SBA becomes an option. So you can get more favorable terms. The better your credit score, the better the terms are going to be. Sometimes you do all that you can in the current situation, improve your situation, and it'll be better next time.
Hey,
So
Boyd,
yes.
Before you go to the next one, one last question on this, and it's a 2-parter, and you're going to love the first part. First part is, how do I access one of these?
Well, you can call me or any alternative loan broker that you may know.
Okay.
Yep,
second part of it.
Okay.
I'm sorry. Second part of the question is, and so this seems pretty good. What are the risks?
Well, the risks are these are unsecured, so it's your name and your social security number and your credit score at risk.
Okay.
If you get this money and you don't pay the money back on time, just like anything, your credit score suffers. There may be a suit to try to get the money back. Just like anything, you buy a house, you don't make your payments, you may lose the house. That's the downside, is the people who lend you the money are going to want it back.
Okay.
Does that satisfy the question?
Yes, it does. Yep.
Okay. All right. Okay. So here's another couple of examples. Still, you are in that idea phase, but you just don't have the cash to get started. Well, and this, boy, we're seeing a lot of this right now too. All the layoffs that have happened in the last couple of months, big companies, Facebook, Google, Amazon, all these major companies laying people off. If you happen to have money in your 401k or your IRA, you can borrow against that. Now, you don't want to actually take the money out of your 401k because there's big tax penalties for doing that, but you can use that as collateral and simply borrow against it. I have a couple of partners who specifically, that's their whole business, is lending against what's in your 401k. So as long as you have at least $25,000 in your account, your retirement account, from your previous employer, you've lost your job, you've got this money in the 401k, what do I do with it? You can borrow against it. And so that's a much more cost-effective route than gutting the 401k, taking the cash, and then having the tax consequences of taking your retirement too early. So that's one, again, another option that people generally don't realize is there. Another option is to borrow against real estate. I do have a partner who will lend against any real estate owned, regardless of your credit score. However, the availability of this money fluctuates. They typically run out pretty quickly into the year because they make their loans, make their investments, and then they have to wait for people to repay them. But you can contact me and ask me, are these guys lending again? Yes or no, and I'll know. But it does fluctuate. But again, that's just exciting to know that, I own a piece of land, I own a rental home, whatever it is, I can get money against that regardless of the credit score. That's not super desirable, but it is a possibility.
Hey, Boyd, there actually was a question that popped up back on the syndicated line of credit.
Okay.
And I think I know what they're getting at, but I'll just read you what the question as it was worded.
Okay.
If you have an EIN, is it better to use that?
Not necessarily. If the EIN has been around a while and it actually has a credit score, what we call a paydex score, if you have business credit, that's where you want to go. But just because you have an EIN with no revenue or anything, no, you'd want to use your personal. You'd have to use your personal credit in that point. There's a whole other workshop we can do, Tim, about building business credit and the amazing opposite parallel universe bizarro world that it is, where the more you borrow, the more they want you to take their money. It's totally different. You request money and it helps your credit score from a business standpoint. Your paydex score, totally different. But you'd want to use your personal credit in this case, unless the business is up and running and already has its own credit score.
Okay, got it. Thanks.
All right. Yeah, that's a whole different workshop we can do. All right. Okay, so with the startups here, one more thing here, there is a business line of credit. This is a little bit larger. This would go up to $250,000. And this isn't so much for startups as it is new or young businesses, maybe their first year or two in business. There needs to be a record of deposits being made into a business bank account. But again, it is possible to get these, up to $100,000 with no collateral, just purely unsecured based on just the strength of your signature. Okay, so for existing businesses, and we do a lot of these right now, lines of credit are very, very popular. If you've got a couple years under your belt, you have revenue, you're making consistent deposits into a business checking account, a business bank, and especially if you have a brick and mortar location. These lenders don't really like when people are just working out of their homes. They want to see that you have an actual office somewhere that just projects credibility and legitimacy. But lines of credit are great because restaurants in particular, they don't want to be burdened with a huge loan, but maybe the freezer goes out. And all of a sudden they've got to get a freezer. And so if you have a line of credit that's open, maybe you need $15,000 to replace the to replace the freezer. You access that $15,000, put the freezer in, then you have time to pay it back. They're very quick. If you have a line of credit just open and ready, you can access it anytime. Now, true bank loans, these can be, sometimes honestly, you just need a bank loan. You want a the money put in your bank account and you're going to use that for certain things. The best thing you can do is get an SBA guaranteed loan for that, but they are slow. They are so slow. A true bank loan, such as, and I can help broker these are quick bridges. You can get the money you need in maybe 48, 72 hours while you're waiting for your SBA loan to come in. The SBA loan could take, 6 months, 9 months, who knows what it's going to take, but a true bank loan can help bridge that gap in the meantime. Now, with some of my partners here, there are term loans available from anywhere from $5,000 to $1 million or more. And some of these lenders, as I mentioned, they don't even need to look at your financials. They don't need to see your profit and loss statement. They don't need to see your tax returns. Some do. What I also really like here is many of these lenders, they don't season your down payment money, meaning they don't care where it came from. If mom or dad slipped you $10,000 for a down payment and you just put it in your bank account, they don't care. As long as they see it's there on closing day, they're happy. Try doing that when you buy a house. You can't. You have to prove you've had that down payment forever, right? You have to prove you don't need it in order to get the money you need. So some of these lenders don't even care where that down payment money comes. You can borrow the money for a down payment. You can borrow the money to buy a business. Now, as I mentioned, some of these do require you have an actual business address, not home-based, but an actual business address. Okay, a few other things here. Once you're up and running, once you have a record, you can prove through your deposit history that you generally would bring in this much. Cash advances are possible. This is not cheap, but it is possible. I think a business line of credit would be preferable, but maybe you just need a quick cash advance. There was an error with the bank, or you're waiting on a large deposit from a slow paying client. A cash advance could help. Banks aren't really good about cash advances, but alternative lenders are. Maybe you're in the construction, trucking, manufacturing, medical industries, and you don't have the money to buy some of the equipment you're going to need. It's easier to lease that. We have companies who will, you give them the invoice, you give them the specs on whatever truck or machine it is you need, they'll buy it, and then they'll lease it to you. So that makes it easier. You don't have the huge down payment. You're just doing monthly payments. It helps out with your cash flow as well. Now, speaking of cash flow, one of the other things we can do is called invoice factoring. If you happen to have slow paying large clients, like a lot of people who work with government, man, you have to wait a long time for those checks to arrive. We can do what's called invoice factoring, where we can give you a percentage, maybe, I don't want to quote a percentage, but it's going to be less than 100%. We give you a percentage of that money now, and then we wait and receive the money when it finally comes. So that helps you smooth out your cash flow. I mentioned bridge loans, and SBA guaranteed loans are terrific. It's just tough to qualify for them. And if the banker doesn't think it's worth their time, they're going to tell you no, as they do 80% of the time. Okay. Now, one last thing to cover on, and I'm aware of the time, and this is one of my last things to cover, are real estate investment options. In particular, I have partners who specialize in what's called the fix and flip loan. This is a short-term, interest-only loan that gives you the funds to purchase the property and the budget to rehab the property. Now, it's not 100% of all your costs, and the more often you do this and the better relationship you have, the better terms they give you. That's going to be a pattern you'll see throughout your entire career. But the banks just, they can't even understand how to do this. If you want to buy a house, you're only and fix it and flip it, you're only going to own the house for 3, 4, 5, 6 months, right? Banks want to do the conventional 30-year mortgage. They're cash flow lenders. They want to know they're going to be getting this money every month for the next 360 months. But these fix and flips are exciting because they're just set up. You just pay the interest on the loan. You increase the value of that home, you flip it, you pay back your loan. These are really sweet. These are really attractive. Anybody looking to purchase rental properties or single or multifamily properties, we have options there that the banks don't, even the purchase of commercial buildings. I met with a friend of mine this morning who is a commercial real estate agent up here in Brevard County. He said in the next 36 months, almost 85 to 90% of the properties here are going to have their loans mature. And if interest rates stay high, they may not want to refinance, and there just may be all these buildings for sale in the next 2 or 3 years. And so that's an opportunity for you and me as entrepreneurs to get some alternative funding in place and possibly buy these assets. Okay, there's the fix and flip I mentioned. We're just about out of time, so if you want this slide deck, let me know. Be happy to send it to you. There'll be a recording available as well. Oh yeah, with the real estate fix and flip, that syndicated line of credit could also work there. If you happen to get 12, 18, 24 months of 0% money, you're just paying the broker fee to get the money. Again, that's also a very powerful tool to get started in real estate investing. You have that ready, you have it in your hand, and when you find the right deal, you already have it. You don't have to wait. You can strike at the right time. All right, so I can't help everybody. Even alternative lenders have to say no to some people, and I hate saying no, and I never actually will say no to somebody, but I will say I can't help you yet. But I have a couple different guys I can work with who can help you repair your credit. I mean, I had a guy the other day with a 480 credit score ask for $100,000, and I just had to say, friend, no one is going to dance with you. We've got to get that credit score higher. So if we can improve your credit score, maybe it takes 3 months or 6 months, but as you improve your credit, you pay less for stuff. That's always going to be the case. So if I can't help you, I'm going to refer you to a credit specialist who can help that. So this matters to you as a SCORE client because you need funding. The bank's going to tell about 80% of you no, and you need to know there are alternative sources, and now you know that there are. So if the bank says no, you can call us, call Otro, call any other alternative lender that you may know, and let's see what options are available for you, even if the bank has said no. So thank you. Seriously, what a privilege it is to get to speak to fellow SCORE clients and any SCORE mentors who are on the call. My name is Boyd Karren. There's my email address, boyd@otrofinancial.com. My phone number is 321-421-0355. Happy to take anybody's questions at this point, Tim.
All right. At this moment, there are no more. There were a couple that I could, somebody was asking for a copy of the presentation. I reminded them they'd have this slide. Yep. And I'll keep an eye on the Q&A just for a second while I make some wrap-up comments. So first of all, Boyd, thank you very much for doing this.
My pleasure.
You know, as someone who works with clients every week, you're right. One of the big hurdles is always, where the heck do I find this money? And I know both from the presentation you gave to our chapter as well as today, I learned a bunch of stuff, and I can guarantee you I'm keeping a copy of this deck near and dear in my files, because I'd say at least half of the people I talk to, I'm going to be pulling this out and
Great.
Making suggestions to them. The other thing is, I just want to remind the viewers and the listeners that if you're in the process of wrestling with either building or growing a business, and you want somebody to help hold your hand through the process of working through some of the options that Boyd talked about, or if you have any other kind of options or concerns about how you get started, there are mentors waiting, just twiddling their thumbs, waiting to help you. And again, all you need to do is, if you Google SCORE Treasure Coast, you'll be brought to our website, and you'll see a thing there that helps you find a mentor, and click on that, and they will hook you up with someone who can help you. I do have one other question here. Let me just see. The question, I think this is a general question about all of the different options you talked about, Boyd. How much do the interest rates vary?
That is the great question. And the answer is, it depends. Okay. Right now, interest rates are higher than they've been in a long, long time. And so anywhere you go, you're going to get sticker shock. Everything depends. It depends on your credit score. It depends on how much of your credit you're actually using. It depends on what you are, what you're asking for, how much you're asking for, what your, and in some cases, what your intention is as to what you're going to do with it. It purely depends. However, anytime somebody actually, if I bring you an offer from anybody, it's completely transparent. You'll know going into it how much that money is going to cost you, and you can decide if that's worth it or it's not. And
Okay.
everybody has different parameters for what they feel is worth it or not. But you'll know when you receive an offer how much it is. But it's going to
Okay.
be more than a bank.
Yep.
Because we have to get much more creative and we're taking more risks. But in some cases, it's absolutely worth it so you can get started and get that revenue going with your new business or your expanded business.
Depending on which of these vehicles get used, could the rate be as high as 20%?
Well, I've seen it higher and I've seen it lower.
Okay.
Yeah, it just depends on the situation. It will be more than the bank.
Yep.
But it's either acceptable to you or it's not.
Yeah, right. And going back to one of your earlier points, you should try the bank first.
It's always
if
go
you-
to the bank first. And the banks
'cause
refer people to us. I have
Yeah.
a relationship with banks in the area. And when they get to where they just can't help somebody, they send them to me. And so
Yeah.
we see what's possible at that point.
Yeah.
And I send
Okay.
people to the banks first all the time. Yep.
All right. Last call for questions. Anybody else? Otherwise, again, if you want to copy the presentation, you know how to contact Boyd. And thank you again for attending. And we look forward to either seeing you at a future workshop that we're doing, or maybe your name will pop up on one of my mentor request sheets. So thank you again for attending. And Boyd, thanks a ton. You're the best.
My pleasure. Thanks, Tim, very much. Go
Right.
score. All right.